Do you want to know the dirty secret of Toronto's housing crisis? Homeowners like high prices. Well, that seems obvious, right? But I'm going to be breaking down this article because it has a couple of good points on kind of the circular effect of why high prices make high prices, right? So make sure to stay tuned. Now, if you're looking for some help on how to navigate this real estate market in the spring 2024 market, you could do so by booking a call with me using a link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a solid and like and subscribe. So the article we'll be covering today is the dirty secret of the housing crisis. Dun, dun, dun. Home owners like high prices. It's pretty obvious, but this article has some pretty good points that I'm going to be going through with you. And their idea they're trying to persuade you into is that a large chunk of the housing demand in Canada comes from investors, and investors are kind of the bad guys. And I don't disagree with this in an extent, but you also kind of need the investors for certain things, as you'll see as I comment on this later. So the first thing you got to go through here is, if you listen to Canadian politicians, the solution to housing crisis seems to be some combination of immigration reform and a Herculean countrywide building effort. I think the countrywide building effort makes total sense. But the latest federal budget said they want to build like 3 million homes by I think 2035 or something like that. That basically just means we have to double our output of the highest output year we've had in the history of Canada house building. And yeah, I'm just not optimistic that's going to happen, whether from the capital area, the labor shortage area, and then the bureaucracy area. There's so many things in the way that's going to prevent that. But, we'll see what they have to say. Now, namely that as a country, we have become addicted to the ever-rising housing prices, largely because we've been conditioned to see our homes as financial assets. And that's totally true, right? I'm going to go through kind of the thinking with a lot of people who are buying right now, because when we talk to a lot of like first-time home buyers, so many of them, get convoluted with the fact that my home is my home and it also has to be a good investment. And yes, sometimes the two can be one and the same, but a lot of the times it isn't, because the home that you may be buying, let's just use an example, like a parking spot. If you need a parking spot in a condo, technically the parking spot is a bad investment because you're paying maintenance plus the cost of the mortgage and the down payment on it. It's cheaper to rent. But if you can't find a parking spot to rent in the building you're buying from, it's kind of annoying because you can't park your car. Do you see what I mean? So that's where the personal side and the financial side totally, are mismatched. And I know that the mindset for a lot of Canadians, especially Torontonians, is that their homes should increase in price because that's the only way they can move the real estate ladder. So that is true to an extent, right? So that's why it's been very hard for a lot of first-time homebuyers trying to get in the market as well from that perspective. The current system incentivizes extracting profits from real estate rather than prioritizing that everyone has access to affordable shelter. Look, I've said this probably before in like maybe the last few months in terms of videos. Show me the incentive and I'll show you the outcome. If the incentive right now is that, you want to own investment property because interest rates were low, where the yield makes sense relative to the interest rate, then yeah, you're going to have a lot of people go towards buying investment property. And if we're not prioritizing sheltering of people as opposed to using them as financial instruments, then yes, that's going to be the outcome. But you know how they could easily change this? They just make investor down payments double, go from 20% to 40 to 50, right? It'll be very, very hard, and don't allow them to borrow from their HELOC or from a refinance. But we have never heard of those rules coming down the pipeline because you know why? You need investors to create the additional housing units. Because unless you have kind of your mom and pop investors who are borrowing from their house, buying a pre-con, because most end users aren't buying these pre-con condos, which is the main source of our inventory as of late, these things aren't being built because you have to pre-sell 60 to 70% of them in Ontario just to get financing, right? And there is that circular reference, right? And that's why high prices need high prices, need high prices, need high prices, right? Now, the speculative effect. January 2025 sold for $241,000, and by the end of the, call it craziness, the average price in Canada was $719,000, which effectively tripled, right? So again, you could bake in the inflation calculator on this, but no matter how you kind of chop this up, prices have increased quite a bit. And you can kind of see here in this chart that they talk about the affordability back in the day, which meant that, you could use 30% of your income to afford a home in Canada. And now it's at 62%. I will note on this chart, it seems totally legit that it's ridiculous. But if you were to actually extend this chart into the 90s, the peaks go back up because the affordability in the way this is used is affected by interest rates. So you can see even during like say 2022, the affordability was like 40%. So it went from essentially like 30 something to 40%, even when we're at the peak prices of February 2022. What happened since then is interest rates went boom, right? And that's why affordability is bad. So if we get interest rates back to 1.5%, is affordability going back down? Absolutely. Is that within the control of the government? Yes. Should the government not be part of the Bank of Canada's, interest rate decision? Also yes. Is that true? Probably not. So part of the problem is that the source of demand is increasingly investors. And this is what I was talking about. If you keep interest rates low, which you can see from 2000s up until like 2022, they were at like 40-year lows, then yes, you're going to drive demand in there. But if we keep interest rates at say like 4%, was it going to drive some investors out of the market? Absolutely. I think so. And that could be coming, right? Now, the Bank of Canada found that investors were responsible for 30% of home purchases in the first 3 months of 2023. That's up 28% in the same period in 2022 and 22% in the same period in 2020. Essentially, they're saying that a lot of people are buying these homes. I am actually a little bit surprised that 2023 is so high. I wonder if a lot of the closings in the first 3 months of 2023 were just from pre-constructions that were bought that kind of skewed the data a little bit, right? Now, this one I highlight is actually a very, very, very valid point. The Bank of Canada's definition of investor is a buyer who took out a mortgage to purchase a property while maintaining a mortgage on another home. So I would say when we talked to a lot of our move-up buyers before the crazy rate hike, it was always the idea of, hey, we need more space. Can we keep the current home we have right now, refinance it because that's some equity because interest rates are low, and then use that equity to buy another home and then rent that one out as rents were increasing and make it work? And the answer generally most of the time was yes. And we advised a lot of our clients, yes, you should probably do that because it made the most sense at the time because interest rates were very, very low. So unintentionally, what has happened is because rates were kept so low and this idea that the article was talking about in the beginning where, real estate has become a financial asset for a lot of people, why not keep the property because, it's so easy to hold on to because the rates are low and then sell it in the future for more money. That has unintentionally created a lot of investors who weren't planning to be professional investors, but say, hey, why don't I just keep this property and buy a new one because they can. And in short, I would say that was very, very common. But now that with rates are higher, I would say it's less common, but those with a higher than normal income, which by the way, there are a lot of in Toronto, are able to still have that option. And when we talk to these clients, they are still keeping their property that they had previously and buying a new one. So they're unintentionally becoming investors. Now, house flippers and foreign buyers are often singled out as a major driver of real estate speculation, and various jurisdictions in Canada have introduced legislation to neutralize those kind of investments. And yeah, that's perfectly fine. Honestly, it's not that big of a deal. I think they've been scapegoated for a while, kind of like how short-term rentals are also being like scapegoat right now. But if you have the incentive of, hey, real estate is a financial instrument and we've only known that unless you were like 50 plus, right? Then yeah, we're going to continue holding on to our assets because your real estate only goes up, right? So it just kind of makes sense. And one of the unintentional consequences is you can see over here that the first-time home buyer rate has gone down, right? So you can see it's gone from 50% all the way to 45%. So it's down 5%, give or take. And since 2014, the investors have gone from 20% to about 25%. So it's gone up 5%. So there's like a 5% swing on both sides, right? And now this blue line is repeat home buyers. My question is the repeat home buyer going to include the people who kept their house and bought a new home? Right? Because that may change some of these numbers, right? Here's kind of where the problem gets even worse in this article, right? Which is kind of, again, high prices fuel high prices, right? The historic problem is that as real estate prices get higher and higher and it becomes a little bit more unattainable based on, like, call it the income to price ratio, which by the way, I still don't agree is a good metric. But if you require higher incomes and higher down payments, it's hard to save for that, which means that passing on the kind of wealth transfer from generation to generation is kind of like nepotism in the socioeconomic warfare, right? Meaning that if you aren't born with a rich parent, it's very hard for you to get on the real estate ladder. And if you're a rich parent, you're essentially going to give everything to your kids so that they have a leg up and they're going to stay in the city. So this is why it's very easy for people who own homes to pass on some of that equity and, to their kids, and they can ultimately reap greater rewards because they have more optionality, right? And we've talked about this many times before, so I'm not going to get into kind of like the nitty gritty of it. But one of the things that they have highlighted here is that governments also have an interest in high property values because they translate to larger tax revenue. I think that this one may be Canada wide as a yes, it's a thing. But in, I would say, larger, the bigger cities in GTA, so call it your Toronto's, Vaughan's, Markham, Richmond Hill, kind of like New York regions of higher price point, the tax rate is so low. They should really increase the property tax now if they're trying to increase the revenue. But again, back to the whole incentive thing, right? Like politicians don't have the balls to increase property taxes, with the exception of Olivia Chow, who obviously did it in the Toronto area as of late. And they don't want to increase property taxes because they're not going to be popular. But if you actually increase property taxes and, to an extent, increase the tax revenue, then tax revenue doesn't have to be dependent on transactions of real estate, i.e. land transfer taxes, because if the market's low, the city loses revenue, or development charges from the builders, where essentially they get passed on to the new buyers, right? Or the investors, which therefore increase the price. Again, high prices, circular, right? And then the final thing here they have is priced out. They're saying that part of the problem is society's obsession with home ownership, which is true, right? Because if you think about it, right now, if you're a first-time homebuyer, you only know of the prior generation where home ownership was easy, like 2 to 3 times your income. Again, I'm just using that reference. Where your parents had it really easy to buy a home. They could just, graduate from high school, go get a job and buy a home. It's very easy and it's a detached home. So all we knew of that. Not to mention, if you look at your parents, right, say the boomer generation or Gen X, they're retiring with lots of money in their house, meaning that it was a good investment because it's gone up in value and they can use that as a retirement plan. So inherently, that generation who are Canadians who grew up here will be like, oh, hey, buying a home makes total sense, right? That's why we have a high home ownership rate. Now, if I look at this from, call it, people who are immigrating here from, like, call it non-Commonwealth countries where home ownership is a lot harder, right? Like where I'm from in China, like it's just land leases. The idea of owning the home that you live on and grow on and pass on to generation to generation is a very enticing thing. And one of the reasons of, immigrants coming here, it's the American/Canadian dream, the white picket fence, right? And that idea is slowly getting eroded in the last, call it, 5 or 10 years, but that is kind of the norm that we have been taught, right? So your current local Canadians who grew up here, who have parents who had it, call it, easier to buy a home, and, it's harder now. And you also have immigrants coming in here who actually want that dream. So you can see when you combine those two kind of mindsets, obviously there's an obsession with home ownership. But if you kind of maybe look further in a few years where the idea of home ownership isn't as achievable and you kind of go into more like European style where renting is the norm, then maybe there'll be less of an obsession with home ownership, and then the housing crisis will go away because not everyone needs to own, right? And that's kind of what they're alluding to. And when people are priced out, therefore an unaffordability crisis needs to be solved. But if people aren't obsessed, at least from my take, with real estate and home ownership, and they can just use that productivity to do something else, then yeah, it probably may not be as big of a problem. And as long as there are like kind of guardrails in place, kind of like corporations who own apartment buildings, and you have a consistent kind of rent, and housing is kind of like a security, and you're not going to get rent evicted or like, friend evicted or family evicted, then yeah, it's probably not that big of a deal. But I think at the current time right now, the obsession of real estate is still going to be there. The idea of homeownership is still going to be kind of present in the current Canadian zeitgeist, but who knows? It may change in the future. Anyways, that's kind of my feedback on this whole why homeowners want higher prices. Because look, at the end of the day, if you're a homeowner, why would you want your property to come down in price, right? That's why everyone's always looking on websites to see what their neighbor sold for, how the market's doing. Because at the end of the day, if we all think that our home is a retirement plan, we're very concerned about what that value of that retirement plan is. It's the same thing as if you have a stock portfolio. You keep looking at your portfolio to see how it does, and that's the whole wealth effect, right? Anyways, those are my thoughts on this article. If you are looking for some help on how to navigate this real estate market, you could book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Or this one? You know what? Just watch them both.